We're here today with Bregje Roosenboom, Client Portfolio Manager at ING Investment Management. Bregje, welcome.
Thank you.
Bregje, Q4 has been quite volatile. Can you please elaborate a bit more on what's happened?
Yeah, Q4 has been very volatile for fixed income and especially credit markets. Generally, we can say the ECB again has been the main driver for what happened in fixed income markets. And next to that, of course, the oil price has been quite a large impact. Has had quite a large impact on the market. So starting off with the ECB, in October we saw they started off with their purchasing program for covered bonds and ABS, which was first of all positive for the market. But then some growth concerns came back to the market, policy action concerns related to sovereign QE. So again, markets, so we saw a little bit more risk coming back to the market. Then in November, the ECB announced that it would expand their balance sheet by another 1 trillion, which was again positive for the market. But then we saw the oil price declining very, very steeply as a result of the OPEC decision to not cut production, right, which has had a very large impact on the rest of the quarter, basically, where mainly EMD countries or names or oil-related were hit, but also some US names in US high-yield names, for example, have been hit by that. Then at the end of the quarter, we saw, last 2 weeks, we saw that markets reacted a little bit more positively to the fact that they thought, well, a low oil price could also be supportive for global growth in the medium term. So again, we saw markets rebounding a bit, and again, I think I've said this every quarter. Interest rates in the US for German bonds are again at historical lows. So how much lower will they go? But that's how we ended the quarter.
And the strategy's performance was influenced by this increased volatility. Can you elaborate a bit more about that?
Yeah, so if we look at the full year 2014, first class yield opportunities has shown a positive performance of 1.55%. But we have to say that the fourth quarter weighed on the performance of the strategy. So if we start by the allocation to the different fixed income asset classes within fixed income, we did quite well by allocating most in the portfolio to investment grade credits. Investment grade credits have done terrific in the last Q4. First of all, because of it has quite some duration, but also just because we had the right names in the portfolio. It was also a good decision to gradually lower exposure to EMD hard currency. As said, they were quite hit by some oil-related issues. And we also increased some allocations to high yield, but we think that the market is overshot a little bit and the fundamentals are still good. And also we held a little bit more in cash and emerging market debt local bonds. If we look at what has then happened to the portfolio, why was the portfolio performed a little bit more poorly, is mainly the EMD part of the portfolio, where some issues, as said, oil-related issues, both countries and names, but also we had some issues with, some serious issues with some Brazilian corporate names. If we look at the high yield portfolio, it was quite flat over the month, so it's not as impacted by not only impacted by bad news for the oil price, and the investment grade portfolio did very well.
Okay, that's good. And regarding the recent announcement about quantitative easing from the ECB, can you share us your views on that and tell us more about your positioning?
Yeah. I think everybody was quite surprised, not that QE was going to happen by the ECB, but I think the size and the commitment that it was an open-ended program did very much trigger return of the theme search for yield. So everybody will be back in credit markets probably. On the other hand, there are also some downside risks. So there's still a risk, I guess, for the oil price to decline further. But also, in the future, the Fed will start hiking rates. So that's also something to at least take into account. So what we've done, we still prefer Euro credit over US credit. As said, US credit is a little bit more oil related, so both investment grade and high yield. We will reduce our EMD hard currency exposure a little bit more and put that into high yield bonds, and then also preferring European high yield bonds there. And we will add to some specific EM local currency countries.
Okay, thank you very much, Bregje.
Thank you very much.